Good afternoon. How are you doing? Welcome back. Another afternoon of fun. Afternoon, Peter, Crum, Yarp. Afternoon. It's time, John, Christian, Jerry, Baggy, Virginia, David. How we doing? Ian, Andres. Not a lot happened today apart from the euro, basically. Boom. So loads of movement on the euro, but not a lot else really. We'll go through the ADRs in a minute. Pound New Zealand, we've had a bit of movement. Actually, that's not a lie. That's not strictly true, the euro. We have had a bit of movement on the pound as well. But as you can see, not a massive amount. So not a vast swathe of volume today, which you would expect. It's FOMC week, so we don't tend to get an awful lot happening on FOMC week. So we'll see what happens this afternoon. Just to quickly recap this morning's DAX trade. Not too bad this morning. So we basically broke straight away to the upside, hit target on the first trade, and then pulled back. So closed out the second part of it there. So nice profit on the DAX this morning. Just under 3 grand, 3%. Pretty good. Not sure what's going to happen with the US indices today. We've had a bit of a rally up on the US at the open, but we've gone absolutely nowhere most of the Globex session. So again, I'm not sure we're going to get a massive amount of movement. There's no earnings today. Tomorrow, it all kicks off tomorrow. We've got tons and tons and tons of earnings tomorrow and obviously into the rest of this week. So earnings fortnight properly kicks off tomorrow. So we've got news today as well at 2:45. So we've got the flash manufacturing and services PMIs for the US dollar at 2:45. So likely the market will probably go a little bit rangy for the first 15 minutes until we've got that in, and then we'll probably get the move. So we'll see what happens. I'm just going to let this EA play out basically, but might be a whippy one. Difficult to tell today, so we'll see what happens. But so PMIs today, we've had all the European PMIs and the pound PMIs today, all negative across the board. So I would suspect we might get negatives on the US as well, but we will see. So as you can see from the ADRs today, most of today's movement is the euro. There's your PMI figures coming out for France and Germany, dropping the euro down. So big, strong push to the downside on all the euro pairs. That's about it, really. So all potential for ADR reversals, all of these. So if you drop down to M5 when the chart updates, there's potential reversal alerts down at ADR for all these. But there's your 5-minute reversal alert on Euro CAD. We've just retested as well. So potentially we might get a little bit of a run up on it, but yeah, not too sure about these euros. Bad figures. We've got the news coming this week on the euro rates, which is on Thursday, 1:15. So we're going to find out what happens to the rates in the eurozone. 4.25 is forecast. Can't see any reason why we shouldn't get forecast. So that will be bullish euro, potentially. Should be bullish euro, but we've seen negative moves off of positive interest rates before. So we'll see what happens. But there is mean reversion opportunities there on those, but I've got long on a few bits of euro at the moment, mostly exposed long on the euro. So euro US dollar, I've got short though at the moment. So I'm looking for a push down into this propulsion gap this afternoon. 135-ish ADR. That gets me out of all my shorts, and then I can flip long. Yeah, see if we can get a push on the euro on Thursday. Afternoon, Amy. Afternoon, Brian. Or morning, depending where you are. Yen is coming down nicely. Little bit of downside movement on the yen pairs, but not a lot. Euro yen is obviously. Pound yen is because the pound weak, but the rest of the yen's a little bit downside on them, but not masses today. So we've had a little bit of news this morning from the Japanese. Bank of Japan is said to mull a big increase in the 2023 inflation outlook. So inflation in Japan going up. Said to have doubts that upward price movement is to persist. So basically, the interest rates in Japan have stayed at negative 0.1 for over 5 years, 6 years now. They don't change it. Inflation is going up, which is bullish. Well, should potentially be bullish for the yen. So that's a slightly bullish statement, but that's all we've had today. Nothing much else moved. That's it, news-wise. So 2:45 this afternoon, we got the PMIs. Just having a quick look at the Dow. Banked this morning, 0.5%. I've got Euro, US dollar, and US dollar Swiss that I can take off the table, but nothing's really gone anywhere today. So I'm pretty much in the same situation I was this morning. 21% on the month, 0.5% bank this morning. What did I bank this morning? Euro pound. Got out of that short Euro pound. That was an H1 M5 mean reversion, straight down into propulsion. And CAD Swiss. That short there, I took that short off of the CAD Swiss. Just because I'm not too sure about what to do with that one, to be honest. So I took that off. And I took the US dollar Swiss off as well. I've got US dollar Swiss shorts that was taken. I took that off as well today. CAD Swiss and US dollar Swiss, both of them, I just decided to take them off. I think there's more upside on this US dollar Swiss. So I thought I'd get out the short, bank it. If it goes down, fine, it goes down. But I thought I might as well stick it in the bank. Dow, we've got 40 seconds to the open. So not a lot of movement on the Dow. In Globex, very quiet. So we had that initial rally up when the DAX opened, but gone nowhere. Upside, we haven't got a lot of upside movement today. Last week's high is the Thursday high, and Friday's high is not far away. Lows, we've got obviously Friday's low, and then Thursday's low is down at ADR. So we've got this whacking great propulsion gap from that move at the beginning of last week, potentially as a downside target this week. So big push up, probably pull back on the week maybe and go, but we might well just do this all week until we get some earnings coming out tomorrow. So there's your open. So little flip out the highs there. Fair bit of volatility this afternoon. Look at that. Jeez, it's all over the place. A lot of volume coming in. Okay, Dow's gone long. Let's look at the other indices. So Dow's gone long, NASDAQ's gone long, S&P's gone long as well. Which is annoying because I'm not in any of them. Anyway. So if you took the pre-market on with the ORB, you're on your way to 1.5 R. Pre-market 5 or 15 on the S&P, on the NASDAQ, sorry, the Dow. Okay, so there's target hit 1.5 R on the NASDAQ. You're 1.5 R on the Dow. The pre-market on the S&P is also 1.5 R. So if you're going for 1.5 R pre-market breaks, which is the norm, all three hit. See, today, days like this, when I'm using this new version of the EA that is intelligent and goes, no, 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 that's far too tight. You shouldn't be taking that one today. If I hadn't have been using this version of the EA, that would have been a 6K win. But anyway, so I should be taking the 5-minute opening ranges, but these are pretty big at the moment, so we'll see where they go. But that's a big push. I wasn't expecting that at the open. So I doubt very much after we get this 5-minute opening range in that the market will want to push outside of that until the news. So we'll probably get 2 inside bars now, go on the 5 minutes, and we'll wait for that news to break at 2:45. Yeah, so the PMI figures in 15 minutes. I'll break there. Right, so upside targets today, watch this level. This dotted line here, yesterday's high, Friday's high. And then this black line is last week's high, which is Thursday. So if we run up into that, potentially we're going to have a limit order sitting at both those levels to drive back down. So if we do get up to those levels, watch for a drop. If we get there, obviously. Hoping for a W pattern on that Euro US dollar. I'm not. I'm hoping for a collapse. You can have your W pattern when you get down there. That's fine. You can have it down there. That's all right. We just pop it down there first and then you can have your W. Get me paid before you get in. David, on the H1M5 EA, are you aiming for 1 ADR as a target or are you manually setting targets at certain wide range bars? So the EA I have set up is targeting 1 ADR, I think. I'm pretty sure that's what I set it to. We'll have a look. Come on. Okay. So you've got 1 minute left on these candles. Those are your 5-minute ranges. So fairly big today. So that's H4 ADRs, H1s. So yeah, 1.5. So basically I've got it set to 1.5 ADR as target for the entire position. But I won't, I mean, it's very rare that it'll ever hit that at all. So that's more of a get me in, manage the trade for me. If I'm asleep and you manage to get a massive spike up to ADR on something that gets you to that target, close it all out for me while I'm asleep type target, yeah? So that's what the EA is set to do. It's set to get me out at 1.5 ADR in profit. But there's your 5-minute opens in. So got double resistance coming up on the S&P up there. There's the 5-minute on the NASDAQ. There's your 5-minute on the Dow. So 5-minute ORB on the Dow is actually just broken long. S&P have just broken long as well. NASDAQ hasn't quite got the long on. That's the only one that I'm actually going to take with this version of the EA this morning, this afternoon. Not quite getting it on yet. So yeah, so basically all I'm doing, as you're seeing in here, is I'm setting my targets manually. So when I get into a position, like EuroCAD there, for example, as a buy. So from there, 1.5 ADR is going to be 150 pips, which is going to be somewhere up here roughly. Yeah. So if it was to spike for any reason and suddenly hit that, obviously it would just get me out. The year would get me out. But I'm setting my targets manually at propulsion gaps. Yeah. Whether or not I hold it to that propulsion gap remains to be seen. But if you want the EA to do everything for you, then you set your target as you see fit. But I would rather target propulsion gaps manually with and that there is 102 pips, 97 is ADR, so that's just over an ADR, which is achievable. But the thing is, the EA doesn't look for propulsion gaps. The EA just goes, let's get some profit. So I'm setting it manually, but up to you. The reason I've set it at 1.5 ADR is basically just to give the EA a load of room to the upside. So if we get a massive news spike, which puts in 150 ADR, I want to be out. If it's a normal day and everything's just ticking along as normal, it gives me plenty of time just to stick the TPs in and adjust it all manually. That's the idea. So like Euro Swiss. And so obviously I will be adjusting my targets. So initially my target, we got in this Euro Swiss, yeah? So I got into an entry there, long on the H1M5 mean reversion. Target I would have put up there. Yeah, it's pushed down further, taken a second position. So average would have been there. So I would have targeted there. It's pushed down, got another trade on there. So would have adjusted the targets down, as you can see, to there. Yeah, it's pushed down a little bit more into here. Got another position on there. So now target there. Yeah, so I can move it down there. Yeah, still profit. So as your average is moving down, I'm retargeting basically. So if this is going to go into a range, obviously bear in mind, we never know what's going to happen. No one has got a clue whether this is going to go back up to those propulsion gaps, whether it's going to fly up and come and test that high, whether it's going to hit that and form a range for the next 2 weeks, or it's just going to collapse out the low. We haven't got a clue, but we know that support and resistance is a thing. So if that gets me a profit, job done. That's my job. My job is to make a profit, not to be greedy and go, well, 80% of the time these propulsion gaps get filled, so I'm going to take a chance that that's going to be right. If that's wrong and it hits that, comes down here and then goes down, I don't want that to happen. I want to be out and I want to bank some money. So set the targets where you are comfortable and adjust them. If we get up to here and we're sitting there and I'm going to go to bed, right? What I will probably do is go, right, let's stick the targets up there in case something happens overnight that gives us an ADR push. Can't adjust that one. I hate it when you put a TP on an order because you can't change it. So yeah, so if we were sitting there, I make the decision, shall I shut it out? Is it enough profit for me to shut it out there? Or shall I wait and see if we are going to get that propulsion gap? If we break that high, there's nothing to stop it until there. Yeah, support. Bang. So if we break this high here, it's going to hit that. But if it doesn't break that high, it's probably going to form a range. So your choice, your decision, which you need to make as a trader is that okay? Or would I rather have that? Obviously, everybody would rather have that. But if you get to there and you're sitting on your P&L, your P&L is saying you've done 20% this month, you've got 2% in drawdown, and you are sitting here with 1.2% profit, and that is 1.5% profit, you're not going to be an idiot, are you? You're going to close that out and put that in your realized P&L. But the EA can't make these decisions. So I make sure that my EA is just basically going to get out if we have a massive, big, nice push. Brilliant. Thanks very much for that. But manually manage it. That's the best way to do it, I think. We know that propulsion gaps get filled. That's why we have the propulsion gap indicator. Yeah, it's just, that's what it does. The market pushes between gaps, fills gaps. That's what it does all the time. Its job is to move up and down and make sure everything's nice and balanced and equal. Yeah, we got a load of sell orders there that are offside. We're going to come back there with a high probability. But if we get to here and it is Wednesday evening, Thursday afternoon, we've got the European interest rate. There's no way on earth, if we're sitting there, I'm going to go, oh, let's hope we get a positive interest rate. If we don't, it's coming down here and it's never coming back. So, you just got to use your head. Which is why trading's got to be done manually. You can't fully automate something like this because it's discretionary, isn't it? Things change. Wish my MT forward. Okay. So as I suspected, we've gone nowhere after the first 5-minute initial cash balance. Market's basically put in its initial range, and now we're waiting for the news, which comes out in 3 minutes. So this 15-minute opening range, or your initial 5-minute opening range, is your break today. Once we get that broken off the news, hopefully we'll be off. Dow's already gone long. So if you took the pre-market break on the Dow, well done. You're in. In fact, if you took any pre-market break today to the upside, you're doing well, apart from the NASDAQ. But you've hit TP on it already, so can't help make money, can we? It's difficult not to make money. Sitting at 4R after 2 stops. Yeah, well, that's cheating, Brian. You can't claim the news. Yeah, you could. It's difficult when you got news on the euro. It's difficult not to make money, really, isn't it? Yeah. Break to the upside, stop out short. Very nice. Hopefully that continues to the downside, but at the moment it looks like it does want to come back up. So whoever wanted that little W pattern earlier, you might get your wish. We will see. It's 1.5 minutes to the news. Afternoon, Burke. Afternoon, Day Trader FX. I have mine set at 2 ADR just in case my trade wants to keep going, but I will manually manage the trade and take profits. Yeah, exactly. Do you ever find it difficult to identify how much you may be in the negative or positives for positions that require drawdown control? How much you may be in the negative? For example, US dollar Swiss from last week, you were in profit, but overall negative. Don't look at it, David. So, news is going to be in. I think the news has just come out, hasn't it? Did I just get it? No. 38 seconds. I'll answer that in a minute, but no point in looking at it. H1 hedging set file, 17% drawdown, 17% profit bank this month. Very nice. Who said reading's fair? Reading or trading? News? Afternoon, Gray. Trading. Damn, autocorrect. I thought you meant trading. Afternoon, Evans. So we just wait for this news. Okay, news is out. Come on, where's my news? Okay. 49 on a forecast of 46.2. That is bullish US dollar. Bearish index. Although the indices don't really seem to be doing an awful lot off the back of that at all. So 49 off a forecast of 46.2. Good old Forex factory, fast as usual. Right, so we've had a negative service and a positive manufacturing. Pretty equidistant. So we're up 3% on manufacturing. We're down 1.5% on services. So that's mixed news. Probably bearish US, I would imagine. I should imagine the US dollar's not liked that at all. Yeah, negative US. So basically, as we know, positive news for US dollar tends to be like that. We might have a little bit of bullish. Any neutral to negative news on the US dollar makes it collapse at the moment. So market not having a great impact on a great impression of that news. But we'll wait and see what happens. This might just whipsaw, might not go anywhere. And US dollar's neutral. Not a lot of move on the euro US dollar. So indices, okay, we've gone short on the NASDAQ. NASDAQ's flipped short. Dow holding, S&P's flipping short. So if you've gone long on the S&P, probably going to flip short on that. I didn't get a long trigger on the NASDAQ, so this is just one trade today. So just to answer your question, David, on the US dollar Swiss. So when you get into a position, when you get into a trade, or rather a position, which is multiple trades. So I've gone long there. Yeah, hasn't worked out. Gone long there. Hasn't worked out. Added down here, or down there, sorry. Added somewhere here. Added down here. Where? Yeah. What's happened in the past has happened. Yeah. So this drawdown control that's been done by the EA automatically for me is basically just getting me out of the position gradually as it's going against me, just to reduce the pressure, to reduce the drawdown. And it's using the profits that we're gaining, and we're all our realized profit off of all these other trades is being used to pay for this one that's not working very well. Yeah. Right. So what happened yesterday, I'm not interested in. What happened here, what happened last week, I'm not interested in that. It's done. It's done. It's happened. Get it. It's gone. Right now, where do we think this is going right now? Because at the moment, I have 0.15 drawdown on the US dollar Swiss right now. What's happened back here, whether I've lost 1%, lost 10%, or what has happened? What I'm interested in now is, what do I do with this 2.23 lots long I've got? Where do I get out of this? So try not to look at the market owing you something. So this US dollar Swiss, when do we take it? 7th of July. So US dollar Swiss, banked 118 there. Let's find them. So 300, 450, 450, 550, 580, minus 513. So about $70, about 100. So about $30 up there at the moment. US dollar Swiss. Must have scaled out some more, haven't we? Yeah. So we have scaled out some. It's the 7th, 14th we're on. So there we go. Right. So let's call it break even with the positions we've got on there. So US dollar Swiss is 2,456.80. Six, 7, 880. 880. Right. So we're 880 down. So we're 0.8, or call it 0.9%. Let's call it a percent. We're roughly a percent down on this, yeah, at the moment. I'm not going to look at this trade now and go, right, I'm not closing this until I get to 1% in profit because I need a break even. I'm closing this trade when I've got a profit, when I can get out of this trade. I'm not going to hold the market, what it's done in the past, to ransom because it owes me 1%. If you go and look at, right, this owes me 1%. I can't close this out until I'm 1.5% in profit because I at least want to make 0.5% on this trade. If 1.5% in profit, this is obviously more than that there. But let's say, for example, 1.5% in profit was there. And you needed the market to get all the way there to get to 1.5% in profit. Yet you had a whacking great resistance. There isn't one there, but let's say there was a support bounce like that, which we broke. Let's say that is probably going to act as resistance, and it's going to be hard for the market to get through that. If that was your target at 1.5% and that was 0.9%, what would you do? Right? Bear in mind, when you get there, your P&L is going to say 0.9% in profit. I can bank 0.9% right now. That is what you want to do. Forget that. It's happened. It's gone. Yeah. Right now, I am 0.05% in drawdown on the US dollar Swiss. And I've got a whacking great propulsion gap target there, which I think it's going to get to. That is what I think is going to happen. How much money that is going to make me, I don't know, and I don't care. I'm not looking at money. I'm not looking at percentage that much. I'm looking at where do I think the market's going to go next? Because the market goes from support to resistance, from propulsion to propulsion. If we break this high here today, there's nothing between that high and that low in the middle of that propulsion gap at all to act as a resistance. So if it breaks that high, it's going there with a very high probability. So that's where I'm going to get out. I have no idea what that's going to make me, whether it's 3%, 5%, 1%, or what it is. It's what it is. It gets me out when I think it's going to get out. When it gets there, RSI is probably going to be extended. I'm probably going to want to flip short. So that's what I'll do. If this had owed me, I'm going back to my old friend, the Aussie New Zealand, because it's a bloody good example. Yeah. I closed out Aussie New Zealand there. Yeah. I've no idea what that owed me. When I closed that out, I closed it out because I thought we're coming up to a double bottom here and I need to get flat on this thing. I've been through the ringer on it. I just won out. That was quite a nice profit. I took it. I've no idea until I closed that profit. I was minus 1% on the entire position over 3 weeks. It didn't even occur to me to check what the drawdown was because it doesn't come into my equation. I need to get out of this Aussie New Zealand. That's all I'm worried about. I need out. Let me out. Thank you very much. Yes, I could have made 7, 8, 10, 15% on the trade. But if it had bounced there and gone all the way back up to there, I'd have been in hell. My job is not to be in hell. My job is to make money. Yeah. Yes, it owed me loads of money. I made about 9% on that move and I lost about 11, 10% on the entire thing going up. That's it. So just forget the past. Yeah. This is why I say in the bootcamp, this is your focus. This is your focus. If you can make this green every day, yeah, and you just worry about this, worry about what's in drawdown on here, this will look after itself because the market, as long as it's going up and down, is just going to bank you money. You've just got to focus on what's not working at the moment and just make sure that you turn that 1.63%. When that gets into 0.5% in green, right? Bank that. You've banked 0.5% today. If every single day there is green, but that thing owes you 4%, it doesn't matter, does it? If you get out of that with 0.5% in profit and every day has been green and you'd lost 4% on that, it just means you've made a load more on everything else. It doesn't matter what's happened there, does it? Right now, I'm short on the Aussie New Zealand. I've not done any drawdown control on this at all. It's coming down. There's a propulsion gap here. There's a low. There's a low. There's a possible resistance area. Previous resistance, possibly turned support, bounced off it twice. So I'm going to get out before we get down to there, assuming that we're going to go and put in a higher low. Yeah, that's what I'm focused on. Whether I've been 10 positions in it, 5 positions in it, 2 positions in it, it owes me 1%, it's banked me 10%. I've no idea. It's in the past. Forget it. Focus on this and focus on this. That's all you need to worry about. Aussie New Zealand, ADR. There you go. So that's ADR now. So right now, Aussie New Zealand, I can shut this out. Now, my decision-making process here is I've got one position on there, on that RSI extension. I held it for 2 days. It pushed up. I took a second. It pushed up. Now it's pulled back down again into there. This owes me nothing. I'm in 2 positions. I've been stuck in it for a week. I could close the whole lot out there at 0.4. If this thing had owed me 7%, I still have the same position right now. I am 0.03 with 2 trades on. That is it. This is the now. It doesn't matter what's happened in the past. We know this thing owes me 1%. I'm not going to sit here and go, right, I need to get this to 1% before I shut it. I don't care. I need to get out of this when I think it looks like a good spot to get out. If it fills these propulsion gaps to the downside, it may not fill those because we might be looking at a pullback push. And if that's the case, I'm not going to go greedy down to here. I'm going to get out here. If this thing pushes into this propulsion gap here and accumulates today and then pushes down into that and bounces, I might take it off there. I've no idea what it'll be, but I'll just take it off because it's green. I can bank it. I'm not interested in how much green there is. It's green. Green is green. Red is red. Your job is to deal with the red. Forget about the green, because the green just goes over here and looks after itself. Makes your account bigger. But you have got to obviously hold for as long as you can. But if this thing drops down here today into this propulsion gap and does 140 ADR, 130 ADR, I will close it. It'll probably be 0.5%. Yes, it probably will hit that. But why not just guarantee 0.5% rather than holding for another day to hope for 0.25% more? Doesn't make sense. Bank money when you've got money on the table. That's the way you've got to look at it, yeah? DAX to the downside. Just missed my TP by a gnat's whisker. So US dollar potentially rallying off the back of that. Okay, so a little bit of a whipsaw down, and we're pushing up now on the US dollar, which is what it should do. Should be bullish stroke bearish. You know, it's not, it's neutral news, isn't it? So to be fair, it shouldn't be anything, but shouldn't be massively bullish or massively bearish rather. Harold paid 6 months rent today with the opening range breakout. Nice one. Very good. That's the way to do it. If you can bank it, bank it. Yeah, this. Just think about money. Yeah, money. Look, this is all money. You can put all this over here and go and spend it. This thing on the chart you're looking at here is just a candlestick going up and down. You have to attach money to the candles at some point. So break to the downside on the NASDAQ. I hate it when it does this. Big drop, really close to target. I'm going to close one. I've got another account running. I'm going to close one on this account. I'm going to let this run. We'll see if we can get this hit. It's probably going to hit it now. Now I've closed it. It will hit it. You watch. Got you. Thank you very much for sharing your thoughts. I think that's a critical part of how you trade. Yeah. So many people focus on or attach an emotion to what's happened in the past, yeah? Which is what revenge trading is. Revenge trading is basically having a bad day or having a bad couple of days or having a bad morning session, and in the market in the afternoon you come to it and you go, right, this owes me for this morning. It doesn't owe you anything. This thing goes up and down. You screwed up this morning. It does not owe you a penny. This market does what it does. You get into the mindset of, I've had a bad morning on the DAX. I've got to get the NASDAQ this afternoon. The NASDAQ will eat you alive, because that's not the way it works. If you focus on, I screwed this trade up on the Aussie New Zealand, it owes me 5%, you will get killed, because you would, if you chase 5%, it's really hard. It's really easy to lose 5%. It's really hard to hold a trade long enough to get to 5%. Yeah. So just bank as you go. Otherwise, it'll chew you up and spit you out. I couldn't count the number of times I've revenge traded in my past. And you suddenly realize you can destroy an account. What tends to happen is, you know, like equity curves tend to go like that. Yeah. When you get an equity curve that goes like that, you tend to find a boom and a boom. That's revenge trading. And before that happens, you tend to find there's a little dip, because the market owes you that. That's what everybody goes, yeah, market owes me that. I need to get that back. So that is over leveraging, and that is death. So focus on what's happening right now. Right now, we've got a propulsion gap on this, and it looks like it's a short today. What happened yesterday, this morning, or anything else, got nothing to do with anything now. Right now, this is broken out to the downside, and you've got a chance of making a 5R return this afternoon. Forward thinking. Afternoon, none care. Brian banked 720 on the upside NAS, triggered short, banked 1320 on the short, done for the day. Good job. See, Brian's just done the perfect NASDAQ. He took the 15-minute or the 5-minute pre-market, banked that, stopped, waited for the 5-minute range to go in, flipped short, made all that, walking away. Now he's going to go and do something else. Exactly what you should be doing. What do you think of pound CAD? I'll go through the ADRs and I've been through the RSIs. We'll go through the I've been through the ADRs. Have I been through the ADRs? I haven't been through the ADRs, have I? Because they're all euro, and I said be careful with the euro because obviously it's tanking. But RSIs, we haven't really got anything to look at. So again, not a lot of point in doing any analysis today because it's all going to change for Wednesday. So at the moment on the pound CAD, I'm long. Got an entry there from the RSI extension on Tuesday last week. No, sorry, Wednesday last week. That's the inflation figure for the UK. Or is that the inflation figure for the UK? CPI came out Wednesday. So that was the CPI. Oil's just hit ADR. We'll have a look at that in a sec. So yeah, oil, that was the inflation figure, which came out as a negative. We've had another down day. We tried to push a down day on Friday, but it broke back up again. So we put a bullish candlestick in on Friday, and it's broken down again. So double bottom potentially here. Canadian dollar is powering up, which means the US dollar is powering up. Trying to anyway, by the looks of things, is trying to power up. So yeah, I'm long at the minute, waiting for the next bull run to start on the pound, but it's very overdue, a little bit of a pullback. So this is kind of what we're in at the moment. I wouldn't want it to see it necessarily get back below the 72. So where we are today, lovely double bottom, pulling back down into that area there, which is that previous area of resistance we accumulated, broke that, pulled back, pushed, which is 125 ADR. I'd like to see a bounce off of that. And obviously we've got propulsion gap targets to the upside. You can see where my TPs are back up in that propulsion gap there. But overall, pound should be still bullish. Again, we're waiting for Bailey to say something, anything. We've had nothing since the CPI last week. We've had nothing from Bailey. So we're waiting for some forward guidance as to what we're going to do with interest rates. So we've had the PMIs today. There's no more pound news this week. So, I mean, he really should be giving the market something, but we've had nothing. So we're double bottoming right now on the pound CAD. So nice looking potential double bottom bounce. Stalling out on the NAS. S&P looks like it wants to roll, but so watch for a pullback into there, potentially a pullback into there. If we're going to go short, this could just be a fake move to the downside and we're going to rally to the upside. Hopefully not. Closing chart. If NAS keeps dropping, I'll be pissed. No, you won't. You'll be green, Brian. If it keeps dropping, you've still made a load of money on it. So don't fret. Oil. So oil to ADR to the upside. So there's the break we were looking at this morning. We've got it. So next stop, 83.5. for oil. So this previous support turned resistance was where we retested and pulled back from, came up, retested it, pulled back, came up, hit it on Friday, managed to break through it and close back down again, and now we're off. So ADR hit to the upside. There's two levels to watch here. So that's the gap that we had. Yeah, there. So there's your gap, retest, 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 propulsion gap. So 175 ADR is your first potential area of resistance to the upside. So where we are in oil now, if you get a pullback into this high, look for a push up into there. So if you do get a pullback into Friday's high, which is this previous week's high as well, little pullback and a rally, if we get it. If not, you're looking for a, sort of roughly half an ADR more movement to the upside on it. But where we are now, obviously, is just on its way up to 85 a barrel. It's whether or not it can scream there, or whether it's going to take its sweet time and muck about and do that. But I'd be looking more for buys than sells on oil at the minute. Yes, Friday's high on the Dow breaks it, hits it, boing, we go. Resistance turns support. Which candle represents the opening on your NASDAQ chart? That one, the dotted line. This one here. Big green one. 230 US. Sorry, 230 UK, 930 US. If you want to know when the US opens, go into your properties and turn volume on. You can see it. It's clear as mud. You can't miss it. Look. Yeah. Tiny little volume. Bang. That's the open. You can't miss it. It's really, really, really easy to identify the open of every index. Yeah. Look. Volume doubles basically at the open. Yeah, literally without fail, every single day. Volume virtually doubles. So just turn on your volume. You'll see. That's covered in the manual for the opening range breakout EA as well, how to do that. Banked 3% on gold sales. Good job. Is your pound CAD qualify as a trend pullback entry? Yeah. I mean, it's pulling back. It's in an uptrend and it's pulling back. I don't trade that way though. If you haven't watched the bootcamp, Nathan, I'm a mean reversion trader. I don't trade trends. I trade bank pullbacks basically. So I use the RSI to measure strength, and then use the strength of that move to anticipate a profit take move by the banks. So when the banks push hard in one direction, they take profit, and when they push hard down, they take profit. That's what causes market structure. So whether it's in an uptrend or a downtrend, it doesn't matter. You can mean revert in any market condition. But obviously staying in line with the trend gives you a slight edge. But then you're going to miss all the opposite mean reversions. So the only reason I would go long on a currency only or short on a currency only is if I think there's a fundamental edge for that direction, which at the moment there is no real, there's no strong directional bias on anything. Everything is, every currency is screwed. Every currency's got inflation going up. Every currency's got interest rates going up. Every country's got unemployment problems. Every country's GDP is dropping. There's nobody that is doing well and another one's doing bad. They're all doing bad. So there's no fundamental edge on anything at the moment. That will shift. But right now it's just trade anything you like in any direction, really. But I've got a slight bullish stance on the pound because I know we've got at least a 0.75 interest rate rise coming at the moment. Afternoon, Michael. Road Rage, I told you previous live session about my US dollar Swiss. What would you suggest I do with these positions? I don't know. I don't understand what you're doing, Road Rage. So you've basically entered there and you've entered there and then you've gone, screw it, I can't be bothered anymore. I don't know what to do with that. I really don't. Why did you stop? You didn't answer my question this morning when I asked. Why did you take 2 positions and then stop taking positions? If you're long from here, you're long from there. If you want to get out of that, you need to add another buy-in to average in to get out there. If it does that. I really don't know. If I was you, I'd just shut them and go, that was a mistake. And go and watch the boot camp that's going on the bottom of the screen again, if you haven't already. I really can't advise you on that. I don't know what to say. Short US 100, NASDAQ, Masters FX, good man. That's an opening range break. Oh my God. I knew it was going to do that. Missed my TP by that. Look. US dollar's rallying at the minute, so trying to. It doesn't. There doesn't seem to be any strength in it really. It is trying to get going, but just a whipsaw in it at the moment. Afternoon, Steve. When you reached a live funded account, do you continue to position trade? Only a handful of pairs. I don't position trade on funded at all. I just don't position trade on funded. Scalping and support resistance bounces is your best thing. Pound CAD, ADR. Okay, so that's broken out that low. So double bottom bounce has gone. So your next resistance stroke support is going to be somewhere around about 125 ADR. Let's change the color of this. So it pushed up into there, broke it, accumulated in there, pushed up, pushed up, pushed up, accumulated, broke it. So this zone here, 125 to 150 ADR is the support. So next entry will be taken down there. Average will drop, and I'll move targets down. I'll leave that on. A horrible color, isn't it? I think I made that a color that you could see easily, but it's awful. It's offending my eyes. Tomato. Let's go tomato. Tomato, tomato, whichever. So 150 ADR-ish. Dow looking like a potential reversal 5 minutes. Still rallying. It's totally flipped on its head, this NASDAQ. So this is the propulsion move. Yeah, so there's your accumulation. There's your open. We broke to the downside. So this is where the sellers started the move. So if we are going to go short, and that wasn't just running liquidity on that low from Friday, this is where I'd expect the sellers to rally the next leg down. So there's your high, your low, looking to put in a lower high here for a drop. If this is a liquidity run on this low, and we're going to push higher, obviously, we're looking to get up to ADR today, which is that high, or 125 ADR, which is much further away, obviously. But I don't know if to close these sales out and just take a small loss on it, or a small profit rather. Need to make a decision pretty quick. Give that another candle. Right, let's have a quick look at the RSIs. Euro CAD 125 ADR. Coming out the lows. Canadian dollar's really strong. Oil obviously is broken to the upside, which is helping the Canadian dollar rally. So US dollar's coming down against it. So the US dollar not as strong as the Canadian dollar this afternoon. So everything will be coming down against the CAD. Right, so RSIs, the only RSIs we've got at the moment are Euro Swiss, which is extended to the downside. Already long on Euro Swiss. So that's a nice RSI extension just below the 30 level there, not massively extended. That was my initial entry. Got 3 on this now. So average isn't far away, 125 ADR. Looking for a push back up into there. We've just taken out this double bottom of this news. So the question is going to be, are we going to continue to the downside on the euro? We've got the news coming out on Thursday. So until then, I get the feeling we might just pull back up inside there. We've had negative PMI figures, which is fine, but I don't think that's going to take Lagarde's eye off the ball with the inflation figures. If you look at the fundamentals for the euro, we're at 5.5 inflation at the moment, which is still way too high, still too high. Our interest rates on the euro are way lower than everybody else's. So that's too high, that's too low. There's still another 0.5% at least on that euro. So whether or not the market reacts positively to a 0.25% increase on Thursday or not will remain to be seen. So when that comes out at 4.25, it's whether or not the monetary policy statement and the press conference with Lagarde backs up the fact that we've got another rate rise or 2. So we know we're getting a July. We need to know if we're getting an August. And if so, are we getting an August of 1/4 or 0.5%? What's your thoughts on inflation? Basically, we just need to find out what's going on with Lagarde. So I think there's still much more upside on this euro. But at the moment, obviously, it's getting hammered. There's money coming into the Swiss franc. So yeah, just looking to get another position on that one. That's extended on the hourly. Euro US dollar, that's a 4-hour RSI extension to the downside. So we're up in a little bull run at the moment. Doesn't take a rocket scientist. See that this one's been nicely rallying. So nice market structure on this at the moment. So should we get that 0.25% increase on Thursday, and Lagarde comes out bullish, we'll be looking for a new leg up. So be looking for somewhere in this 72.24 moving average area for the next leg start to form. So a little bit more downside potentially on it. Hopefully, that's what I'm hoping we're going to get, so that I can get TP down here. I've got a long on here as well. So as soon as we get that TP, I'll flip long with a second position and then get out as we start to rally to the upside. But that's nicely extended to the downside at the moment. And we've got the pound US dollar also extended to the downside on the 4 hour. That's been embedded now since here. So I got out of all these shorts last week. Flip long, 2 positions long on. And again, same thing. Same as the euro US dollar, basically. Looking for a push back up. Continuation trend to the upside. 24.72 area is where we tend to get the bounces if we're going to continue the trend. And there's no reason, again, why we shouldn't continue that trend to the upside with the pound. We just need Bailey to come out and pull his finger out of his backside and actually say something, which he hasn't since we had the inflation figures. So we're waiting for some news for the pound, basically. Do August meeting, no August meeting ECB. I don't know. Not sure. I haven't looked forward that far yet. I think we have July ECB and the next one is September. Possibly, I don't know. Not sure. They'll reschedule it. It doesn't come out like New Zealand, for example, doesn't release it every month. They release quarterly a lot of the time. They'll change it depending on what needs to be changed. They'll still have a meeting. You'll still get monetary policy meeting minutes released, but there may not be a decision on the rate increase. They don't have to. They do what they like. It's up to them. In stable market conditions, we don't get interest rate rises every month at all. You know, quarterly. This is all these figures you see on here. These are quarterly. Yeah. So, well, that's not quarterly. That's just what it is. But inflation reported quarterly, GDP and unemployment. So these are the monthlies. Quite often too aggressive to look at fundamentals. They release figures every month, but they don't necessarily take those figures into account every month for fundamental decisions because things will fluctuate. Yeah, you'll have a big business go bust and there'll be 4,000 people made unemployed. That doesn't mean unemployment's gone up and it's going to stay up. It means those 4,000 people have got to find other jobs. So over the next quarter, that'll flatten back out again. So their quarterly reporting is more important, which is why we have these moving averages on the chart. These are the quarterly and monthly moving averages on the daily. So we're looking at what's happening quarterly and monthly to give us an idea of what the current trends are. But obviously, you know, none of this means anything if the fundamentals shift for the pound to the downside and the Fed suddenly come out and go, we're going to put the interest rates up by 1%. This is going to be down here. So this uptrend means nothing, does it? If the fundamentals shift. So, but yeah, I mean, if there isn't one forecast, it might be beginning of September. Yeah, they just have, it's not forecast yet, but you'll probably find it will get forecast in. Just haven't got it in the calendar at the minute. Michael, Euro CAD. Okay, so propulsion on the S&P and the NASDAQ. So this is a key level. If we're going to continue downwards today, this is where we're going to short. If. Don't like that move back up there. Dow's beautiful today if you're still in the Dow. Lovely opening range break to the upside there. So there's your opening range breakout EA. There's your 15-minute. There's your 5. Whichever break you took today, you are quids in. Euro CAD. So Euro CAD pushed down into propulsion. So first entry on that one was last Thursday. So I'll be taking a second entry on this one down in this accumulation on 50 ADR. So the EA will just get me in there. 49 is half an ADR. So down to there is somewhere around 80. So an ADR is 97. So one ADR is about there. So we're about 3/4 of an ADR now. So I'll be taking a second entry in a minute. Next reverse alert on M5. Maybe not. It's way too far away. So I want a little bit of a push up and then another new low to be put in so we can get a reverse alert down here. But long on that at the minute. Again, euro bullish. Same as the pound CAD. Euro CAD, pound CAD. Yeah, you're always going to find the euro and the pound against the CAD and the US dollar are fairly similar. They move together. The euro moves with the pound a lot. The US dollar moves with the Canadian dollar a lot. So you find they always look very, very similar. The pound CAD and the euro CAD. Out EU, 4.5R, stops covered. Nicely done, Brian. This week it is yen talk. Also, yeah, on Friday, we've got the interest rates for Japan. They won't change that. They don't change that. So if you look at the history for this, you can go back as far as you can. It's minus 0.1%, going back to 2016. We do not change our interest rates in Japan. They never do. So all you're looking at here is the monetary outlook report and their CPI. So they're anticipating CPI dropping. From what they've said today, they might not actually get that. So this is more a case of what they're planning to do. But whatever they plan to do, it doesn't matter. They plan stuff all the time in Japan. They never follow through on it. They just let their currency devalue until they get to a point where they're unhappy with it, and then they slam a load of cash into it and you get an intervention. That's what they do in Japan. So you'll get little pushes and spurts and that sort of thing. But as long as the NASDAQ, as long as the US dollar is strong and it can push against the yen, typically the yen will just come down as the US dollar's making a strong move. So we'll find out what's happening with the Fed basically on Wednesday, and then they'll say something on on Friday, but doesn't really matter too much what they say. The market will do what the market wants to do with that information. I just put my TP down there on the US dollar yen. Yeah, there's talk. Whether or not it moves, I don't know. The Japanese have to say something pretty substantially different to what the market's expecting to actually rally the yen. And usually it's threats. So next support on the Euro Swiss. So you got that level there. Which is 95,700-ish. So roughly 23 pips from where we are. So half an ADR to the downside. You've got a potential area there that we reacted at a number of times. Accumulated around it a bit. A little bit of a price discovery out of it. But the price discovery out of it went down to 94.5. So that is 161. So that's 3 ADR. So if that level there doesn't hold, which is 150 ADR, there's not really much in between. So, but this is the Euro Swiss. So the Swiss franc will get money pumped into it or pulled out of it, depending on what happens with all sorts of stuff, basically. Any kind of fundamental can pump money into or pull money back out of that Swiss franc. So Euro will move on the rate announcement. The euro rallies basically on Thursday if we get positive interest rates and Lagarde comes out bullish, which means also the Swiss franc rallies. So when you've got two things which are rallying together, you tend to get a little bit of a rangy activity, which is why you see an awful lot of this with the euro Swiss. Yeah. So 1, 2, 3, 4, 5, 6, 7, 8 weeks. Literally hardly went anywhere. So it's a real slow mover. So to get down to that level that I looked at down there, which is 3 ADR away, you could be weeks. It's a funny pair to trade, the euro Swiss, and it can be, if it gets into a squeeze, it can be quite nasty. But all Swiss franc pairs are like that. But you just got to make sure give yourself a nice easy out on it, really. But it's as you can see here, it's very nice for getting in and out very, very quickly and easily as well. But that's all I can see on that one. 150 ADR and then a drop, basically. Nothing down, nothing in that gap. Look, it's that area there. You got some other little levels in there, but we'll see. It might be a long one. Hopefully not. Dow seems to have stalled out at these highs. If you're long on the Dow, starting to look, it's like it's weakening a little bit. All the indices are starting to run out of buyers. DAX is coming down as well. It's true what you say. Most of these indexes, currency pairs, spend their time consolidating. 80%. That's what the market does. Markets only move when there's a reason to move. So the markets, all instruments, everything has to have a reason to pull out of balance. In the banks and institutions, you'll hear it called balance more than range, because it's an equilibrium. It's an area where the euro Swiss is probably not a good one to use. Euro pound. So this is an area where the Europeans and the British are happy to conduct business, and as long as we are happy to conduct business, i.e. it is beneficial for our countries to conduct business at that price, that is what we will do. If there is a point where the market wants to see if they can push their luck and trade at a different level, we'll get a price discovery move, which tends to be a push outside of that range, and then a pull back into it if price discovery fails. Yeah. So this is a price discovery. This is a balanced price discovery which succeeded. We get an impulse move into balance, price discovery, balance, price discovery outside of this one up into there, and nothing's exact. It's just the market moving around from areas of equilibrium to equilibrium, and it repeats itself. It comes back to these areas. We want to conduct business down here. Can we go down there? No. All right, then well, let's go back up there and see if they want to do it back up there again. That's all it does. But it will only do this when there is a reason to do it. There is no reason to upset the apple cart. If you can sit here and just press the buy and the sell button over and over again for 3 weeks and make easy money, you will do it. And that's what they do. At some point, someone will go, let's try it short. Let's try it long. And they'll try and rally the market. If there's not enough people on the other side that are willing to make that move happen, they will just get forced back down again. That's what we call a liquidity run, or as Wyckoff called it, a Wyckoff spring. Yeah, it's a price discovery failure. Let's see if we can rally to the downside. Nope, we can't. All right, let's build up enough book so that we can try again. Yep, this time we made it. Excellent. Let's try again. Nope, we failed. Let's try again. Yep, we managed to get down here. Let's try up here. Nope, we failed. Yeah, that's all it's doing. But what you'll find it does is it always does this on fundamental news events, because that's when the liquidity is available to be able to make these moves. If you want to try and go up there, you need a lot of liquidity, because if you're going to buy, you need a hell of a lot of people to sell to you. So you need to find points in the market where there's going to be a lot of volume. When there's news events coming out, when speculative traders are changing their position from long to short, or adding to their long position by putting more into the market, there's liquidity. This is why you see volume pick up around news. It's just people placing more orders. When I say people, I mean banks, institutions. All we're doing with propulsion moves, these grey blocks and these blue blocks, is we're following the orders the market has placed, trying to find a new level to trade at. And it will keep in balance 80% of the time. And then it will spend 20% of its time trying to find a new level to trade at. And then it will spend 20% of its time trying to find a new level to trade at. Try again. Try again. Yeah. People see this as a downtrend. I see this as a wacky great range followed by a chance to see if we can trade down here for a whacking gate range. Look how long that is spent range bound in that entire move. There was 3 days where it moved down like that. The rest of the time, it's range bound. 80% of the time, the market goes up and down to varying degrees. This is one massive range. And if the market's going to do that, it doesn't matter whether we hit the buy or the sell button, does it? You just need to hit the sell button after it's done that and hit the buy button after it's done that. The only time we really get stuck is if the market goes into a trend after a trend after a trend, and those price discoveries keep going and they don't find an area of balance. That's when we get stuck. Look at the Aussie New Zealand. Again, I keep bringing myself back to this, but push, range. Yeah, that was 3 weeks, 4 weeks? But a week and a half of that was range bound. Yeah, it's just such a long time. And if it goes into a range, if we get squeezed, as this one, this is a perfect example. If we get squeezed and it goes into a range, we can get out. If the market spends 80% of its time in a range, the only time we're going to be in trouble is 20% of the time. And if these 20% of the time we're in trouble, the market then goes back into a state where it gives us an exit. Can't really go wrong, can you? You just got to be patient. Wait. Speaking of patience, this isn't going anywhere today. So we are pulling back down potentially into this, again, range, price discovery, range. Same thing happens on every time frame. The market's a fractal. Same things are happening over and over again. Tiny orders, big orders over weeks. It's all the same thing. Accumulation, propulsion, accumulation, propulsion, accumulation. Yeah. Buyers bought here. They will either buy again or they'll get overwhelmed by the sellers. No idea which. One of them will happen. But if you're going to go short and you think, I don't want to be in this anymore, that's probably where you'll be looking for outs. But this isn't going anywhere today, so I might scrap this. Just not worth. Just not worth it. We're an hour in to the session, and literally all we've done is there's your Globex, there's your open. We are literally back where we started after an hour. So either this is going to run. It might run to the upside, but it doesn't look to me like this thing wants to go anywhere, does it, at the moment? And I just don't want to sit in this all afternoon and have to worry about it. So I think I might close it out. And be done. It's a shame because I had a nice little 2R down there, but it wasn't to be today. Right, I'll leave it there this afternoon. There's nothing else I've got to talk about at the moment. Just so you know, I've got, it's the school holidays in the UK. So I'm going to be taking some time off over the holidays and going out and doing stuff. I don't know when. It's just a case of we'll be going off and doing things. Because we live in the UK, we will go off and do things when the weather's nice. So I may never go. But it's a case of waiting for the weather. So I'll let you know. I'll post in Telegram, and obviously I'll adjust the schedule in the live room, basically, for when I'm doing things. But I'm going to take probably a week off over a period of the 4-week period, and then I've got an entire week off where I'm going off on holiday. So I'll have 2 weeks off over this next 6-week period, on and off. But I'll wait and see what happens with the weather, basically. Just going to go out and do day trips and do stuff, so the kids don't sit there and just play on their computers for 6 weeks, because that's what we're going to evolve into. Thumbs. Right, I'll leave it there. US dollar Swiss and euro. This is exactly where I was this morning, pretty much, when we looked at it after the news. So we had the news and we've literally gone nowhere. So none of this is moving at the moment. So just bear in mind, overnight news today, there's nothing to worry about. We've got CB consumer confidence tomorrow afternoon, which is hit and miss. So tomorrow is a no news day. So again, might have one of them tomorrow. But the first movement we've got coming up is going to be inflation figures for the Australian dollar on Wednesday. And after that, we've got an entire day of nothing before FOMC. So Wednesday evening through to the end of the week, chaos. Up until then, probably a bit up, probably a bit down, not a lot of movement. So just if you want to bank stuff because you want green, bank it. But I don't think we're going to get an awful lot of movement. So I'm going to wait until Wednesday and then see where the P&L is on Wednesday. If this hasn't all hit target, obviously. See what goes on. But all right. So that's all I've got for you today. Can you just recap quick bias for pound CAD? Pound CAD, mild panic. Pound CAD, mild panic. So pound CAD is long. So bias wise, pound CAD. Yeah, pound CAD is range bound, -1. That's only because retail at the moment are long. Retail are long in the pound CAD at the moment. That's why it's coming down. Yeah, so there's no bias on the pound. There's no real massive bias on anything pound wise. Pound US dollar bias is short, but again, that's because retail's longing it at the moment. When retail stop longing it, that will flip back to neutral. So there's no real advantage fundamentally on any of it, really. But at the moment, it's bullish. Yeah. Same with the pound US dollar. We have got another 0.75 to 1.25 interest rate rise coming over the next 3 months on the pound. Yeah. So there is more interest rate rises. That is bullish pound. We have no clue what's happening with the Fed. We've got no clue what's happening with the CAD, but the Fed have said they don't want to put interest rates up much if they can possibly help it. We might go another 0.25% to 0.5%. Either way, fundamentals are long for the pound and the CAD and the pound and the US. But look at what you're running into, yeah? So we've had a big collapse based off of the inflation figures last week, which is there. Yeah. We've got all of this balance. Remember what we were just talking about, yeah? What's this? Balance, however you want to measure that range. Balance. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 weeks sideways. 2 months. Happy to conduct business here. Price discovery. Can we trade up here? No, we can't. Okay. What are we going to do now? Go back into balance. Or we're going to go, we couldn't trade up there then. Do you want to trade back down here? No, we were happy somewhere up here. Or we come down into here and it goes, no, we're happy down here. Either way, at some point, if this pushes down into these lows, you're going to be massively extended and they're going to profit take that move and you're going to get a move back to the upside. So don't panic. I've only got 2 positions on this. Yeah. And if this comes down to here, I'll have 3. And if it comes down to here, I'll have 4. Worst case scenario down here, I'll be sitting in something like 2% of drawdown. And if it pops back up to there, I'll close it and I'll be done. So don't panic. Nothing to panic about. Look at this move here. Entry, 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 exit. Entry, entry, look into the future. Entry, entry, exit. I'll even draw it on. Look. That's what it's going to look like. Something like that. When the red lines are drawn on. Yeah. Got a huge propulsion gap target to the upside. Look at what this was on the hourly chart when I got into it. Yeah. Got into a trade. We pushed up. We left a propulsion gap target, a propulsion gap target. It came back down. It tested that propulsion gap, pushed up, left whacking great propulsion gap there. So added a position, added a position, added a position. Yeah, on there, added up there. Where did it come back down to? That propulsion gap, that propulsion gap, that propulsion gap. What have we left in our wake coming down? That propulsion gap, that propulsion gap. Now we're leaving this propulsion gap. So if this comes down to there and fills that propulsion gap and that propulsion gap, which is pretty much done, where's it going to go next? Back up into that propulsion gap. How do we know that? Because that's what it always does. Moves these propulsion gaps, comes back to them. Got a wacky great propulsion gap down there. It could come all the way down to there. And if it does, I'll be in 1, 2, 3, 4, maybe 5, push 6. That's going to be a hell of a move, isn't it? What do you think it's going to do after it's done a hell of a move like that? Take profit on it. Where's it going? Back up. Don't panic. Market goes up and down all the time. That's what it does. We just need to wait for the market to push back. But that's a biggie. And if it does push all the way down to there, that will be my next target. Scale in, average target out. If you basically scale into the, if you get the market reverse alerts EA, stick it on your chart and say to it, right, go long anytime you like, scale in 3/4 to 1 ADR apart anytime you like, right? And if all you do is you come onto that chart once a day and adjust those propulsion gap, adjust those targets for every position it's ever taken into the closest propulsion gap that is above your average price, you will get out of every single trade you enter. And I say that hand on heart, 100%. Go and back test it. Yeah, the market cannot go like that forever. It has to take profit. If it doesn't take profit, the banks don't make money. Where do the banks go to? Where they previously started their moves. Yeah. So my average is here. That propulsion gap makes me that much. If it was to move down to here, we've got this big propulsion gap here. My average would be down there. And I would make that much. I'm always going to make somewhere between half an ADR to 1 ADR's worth of profit on every trade I make, because there's always going to be a push above my average to the nearest propulsion gap where they may start a leg down. Don't forget what we're doing is we are wrong on market structure. We thought it was going to go long and it's going short. We're just waiting for it to do the next pullback before the next leg down. And if it does that next leg down, I don't care, because I'll be out on that pullback when they take their profit. But if you're in lots of positions for any reason, I mean, you may have got into a long here, possibly. Then you're just in one more position than me, aren't you? But look at my drawdown on the pound CAD. I'm in 0.41% drawdown with 2 positions on. It's just nothing, is it? Irrelevant. Don't panic. Can you look at UJ? Yeah, I'll quick look at that. Then I'm going 125 on oil. Oil's off. That Canadian dollar will. This is why this Canadian dollar is strengthening, because oil's rallying and its main export is oil. US dollar yen. So I got short on that one at the moment. Again, look, propulsion gap. There's my target. I've no idea. One thing hopefully that's becoming clear in here, if you're in here every day, is I have no idea how much I'm targeting. Yeah. What's your target? Half an ADR, ADR, 60 pips, 100 pips? I have no clue. I'm targeting where I think price is going. It's either going to get to there and it's going to bounce like it did last time, or it's going to get down to that propulsion gap and it's going to bounce, or it's going to fill that propulsion gap and fly through it. I've got no clue what it's going to do. but I know it moves from propulsion to propulsion, so that's where I'm aiming. Yeah, whether you hit the target or not is no idea. But that is 180 pips. ADR on this is 158, so that's over an ADR. We looked at one earlier that was just under an ADR. But I'm not targeting a number of pips, a particular point of movement. I'm targeting where I think it's going. It's going down here, I think. If it doesn't, it's going up there. And if it goes up there, I'll deal with it later. But right now, on this one, I'm short because I'm anticipating this being a market structure down. It may be completely wrong, and it might be that. But if it is that, what's it going to do next? Down leg before it puts in up leg. So if down leg comes down to here and then it goes like that, I don't care, I'm out. If it does that, I don't care, I'm out. I don't care what it does. But it's extended to the upside, which is why I'm short. Yeah, we've had a big, strong rally to the upside. I'm looking for a profit take move on that at the moment. If it wants to continue like it did here, yeah, as you can see here, I got in there looking for that. Exactly what I'm looking for now in reverse. I was wrong. So I got out when I was right, when it let me out, when it did what? Hit that propulsion gap. Hopefully this is kind of why I'm not having the market reverse alerts EA target a half an ADR or anything at the moment. The whole purpose of me using these propulsion gap targets is to show you how this moves the market. This propulsion gap indicator is the best thing since sliced bread. Look at every single propulsion gap in the past here that is grey. If you had hit the short button here and targeted the previous propulsion gap, and then it moved up and you targeted the next one, and then it moved up and you targeted the next one, and then it moved up and you targeted, if you just keep targeting the propulsion gaps, you will hit it next. One of them you will hit. And that one that you hit will be a profitable trade. How long you stay in that for, we've no idea. Maybe a week, maybe 2 days, maybe 2 weeks, maybe a month, maybe 6 weeks. I have no idea. But what will happen is they will take profit on that move and they will move it down to where the last move started from. Always. They may overshoot it. They may just undershoot it. They may hit it to the pip and get added and drive away from it. We don't know. But what we do know is these act as magnets. So right now, I'm short to that magnet. If it pushes up to there, I'll be short back down to this magnet again. And if it leaves a big propulsion gap in there and it gets all the way up to there and I've got 3 positions, and I'll be short down into this magnet. That's what I see on US dollar yen at the moment. At the moment, I anticipate a downside move because we've got extended to the upside and I'm looking for them to profit take, which they are doing. Whether they will do it enough for me, I don't know. We'll find out. At the moment, it looks like it's going our way. But this is a hedge for me as well on the US dollar. I've got 2 longs on, 2 shorts on at the moment. So actually, I want the US dollar to rally. I want this to go up because I want my US dollar Swiss to go into profit and I want my Euro US dollar, which is a short to go into profit. So I'm happy to go into drawdown on this for a bit so that these two get paid. When I've got those paid and over there, then I'll wait for that to come down and I'll get out the US dollar short. Doesn't matter which way you go, does it? You just need to make sure you're not getting in for just any old reason. Give yourself at least half a shot of getting a profit or half a shot of timing it as close as you can. That's all you can do, isn't it? Euro odd ADR. So Euro still dropping. Australian dollar rallying. This is the Aussie dollar is having a push. So Euro odd hit to the downside. Again, ADR hit to the downside on this one. Look at this propulsion. Huge propulsion move. Where did it come back to? Huge sell order. Added. Target. Target. Which way is it going? No clue. Where's it going? There or there? As long as you know where it's going, you know how to get in and out, don't you? Yeah, that's half the problem. Everybody's trying to take a trade and they're trying to get in with a risk and a reward. If that reward is miles away from where it's going, you're never going to hit that. So as long as you know where it's going next, you know how to deal with it. So if we go long here, targeting this propulsion gap to the upside, and it doesn't do that, we know it's going down to here with a high sense of probability. So we can plan to get in so that when it gets there and it bounces, we know it's coming back to here. Because if it doesn't go there, it's going to leave that and get down to here. So this will still be there in the future when we get to here. So we know now where it's going back to. So as long as we've got an average price that gets us out in profit when we get back here, can't not win, can you? Position trading. What's the difference between this propulsion gap indicator and the ones drawn by WRB? Nothing much. This one basically grays out previous propulsion gaps. And that's it. That's it. So it uses, it's virtually the same logic, except it doesn't, it uses a slightly different logic, but very little, Sagar. So if you've got the old pre-version, the only difference between this indicator, so this is my support resistance propulsion indicator, yeah? The only difference between this indicator and the ones I had before is I've built this indicator to put support resistance in it. So it draws in the weekly and monthly levels, which are the strongest support resistance zones that we trade within. Yeah. So it's all built. It's just one indicator that does everything. Plots your trades, draws in the symbol, does everything, basically. That's all. But if you've got all the old ones, there's free versions of everything all over the internet. So grab whatever version you want. But again, what's the difference between the old version, that old WRB indicator, and this propulsion gap indicator? Neither of them have got advantage over the others. If you have different settings on that old indicator to this one, it will draw different areas. Which ones are going to work, I couldn't tell you. AF just took off like a rocket. Yeah, Aussie is rallying. The Aussie dollar's having a little push. It's not the Swiss franc, unfortunately. I'd like to see the Swiss franc dropping. Yeah, not a lot. Right, I'll leave it there. Anything you need, let me know. I'll be in Telegram. Otherwise, I'll be back tomorrow morning, 7:50, same time, and 2:20 tomorrow afternoon. And we'll obviously have a look at how everything's going then. I'm out of indices this afternoon. DOW was the one to go on. If you took the DOW, lovely, well done. Everything else is, depending on what you took, profitable or not. But yeah, unfortunately, I didn't get my TP on that one. Just so it shows you what the difference is between a profitable day. Well, this is a profitable day because I profited off the DAX, but a profitable session on an instrument is the difference there between probably 2 pips, making me 4% profit, or a break even. That and that. But that's how close it is every day to making a decision. Right, I'll leave it there. Anything you need, let me know. Otherwise, I will see you guys tomorrow. Have a good evening.